How's it going, everyone? It's Sam. Today I want to go through all the positions in my M1 portfolio. And I apologize, I'm wearing the same shirt that I've worn a couple of videos because I'm recording them for the weekend. I want to continue to give you relevant information, so I'm not posting anything that I think is gonna not hold relevance when you see it, but I'm also going away for the weekend, so I want to preset some videos and edit them for you guys to see over the weekend. So I want to go through every position in here, and before I do that, I want to say thank you to all the people that have been subscribing and liking the videos. It really does help out the channel, so if you don't mind hitting that like button, it really helps. And I do want to say too, if you want to email me below, I am going to start including some of the questions that you have at the ends of my videos, and I'm really excited to do this. If you don't mind staying away from the questions about specific stocks, that will help, just because that takes a lot of research. And if you shoot me a random stock, I probably won't know it. Just more general questions about finance or investing or financial independence, something like that. I think that that would really be beneficial, and that way I can answer some more in-depth questions on the channel. So going through this today, I will say I transferred a portfolio, and this is something that I don't like about M1. When I transferred the portfolio to M1, it was just a index fund. I had already had a lot of investments in M1 at the time, but then it reset all of my percentages. So if I go to all here, this doesn't actually give me the return of my portfolio since I started it. I've done a lot better than 4%. And if you look at all my individual stocks, they aren't correct either for the total gain. I bought Facebook at about $155 a share, and it's $230 today. So I have gained more than 14%. So I don't know exactly why that happened. I reached out to them, and hopefully I'll hear something back soon. My earned dividends is incorrect too. I've earned a lot more dividends than $5 since I started this. So I'll just go through each of these holdings though today, and I want to hear what you guys think about this. I've reached out to someone that might actually review my portfolio, which will be pretty fun. I think that that'll be cool. So be on the lookout for that and my reaction to that, but that might be a few weeks still. So as we go through this, I'm going to explain what the stock is, how much I have in it, why I bought it, what I was thinking at the time, and whether I'll invest more in it. So the first one here is the Vanguard S&P 500 Index. So I bought this a while ago. This was actually the first thing that I ever bought, and it was in my Vanguard account. This is when I only bought index funds. Until recently, I hadn't bought individual stocks, but I really feel good about the Vanguard S&P 500 Index. If you're someone that's just starting investing, definitely think about investing in that. It's just a general market fund and holds a lot of different companies. So I have a large position in that. I don't plan on selling it because I think that once you buy a position, unless something drastically changes, you shouldn't just sell it to invest in other stuff, because that's kind of a dangerous game. I like to play the long game, and I'm a long-term buy and hold investor. The next stock I bought was Facebook, and I talked about this on my video that I released Friday. I actually bought more Facebook stock this week, and I bought at 155 and I did not buy enough. So at the time I had invested a good amount of my portfolio, is about 10 to 15% in Facebook, and I knew that it was probably going to go up over the long term, but I felt good about a lot of these other holdings too. So I wanted to diversify, but they were my largest holding, and I wish I had bought more. It's $235 when I'm recording this, and they just introduced Facebook Shops, which is slated to add possibly $30 billion to their revenue, and they're at $70 billion now. So if they can do that, they're going to make a ton of money. And I talk more about it in that other video, so you should definitely check that video out from Friday about the stocks that I'm buying. But I feel really good about Facebook going forward, and I think that they're going to just earn a ton of money. The next stock that I bought was Foot Locker, and I'm pretty excited about this because they've done really well since I bought in. So I bought at an average of $22 a share, $22.50, and I actually bought when it dipped down to $17 or $18, but they're at $29 today. They hold on to a lot of cash, and they pay a really high dividend. When I bought in, I think they're paying about a 7% dividend, so that's really enticing, so I bought some of that. I think that once the economy reopens, they'll do quite well. The next stock I bought was Berkshire Hathaway, And I bought a good amount of them so far. I bought more just on Friday. In that video, I talked about that too. But I think they're a good hedge against the market downturn that is to come. So if the virus comes back and we can't go out again, I think Berkshire will be able to weather the storm a lot better than other companies. They hold about 130 billion in cash and own tons and tons of different companies. So I think that they will continue to make a good amount of money. And if the government ever runs out of money and out of stimulus, Berkshire Hathaway will be able to buy some companies very cheaply. The next stock that I own is VNQ, and it's actually an index fund. It holds a bunch of different REITs, so real estate investment trusts. I think that they are posed to do well once the economy opens back up again. It is a little bit dangerous because they hold a lot of different companies that are in the real estate space that might go bust right now because there is nothing for them to gain revenue on because a lot of their buildings are shut down. I think that they're still a good value over the long term. I bought them for about 70 cents on the dollar from what they were at the beginning of the year. So I think that they add a little bit more real estate to my portfolio, and that will be good over the long term. The next company I own is IIPR. They invest in the medical marijuana space, and they are growing like crazy. They're acquiring new properties. I think that they own maybe 60 properties now, but they're adding like 5 or 10 every quarter or every half a year or something. So they're just buying up all these properties, and it's nice because they give these companies an influx of cash. So they do these triple net leases where they come up to a medical marijuana company and they see that the medical marijuana company can't really get any kind of loans because the banks aren't set up to lend them money. And a lot of these are unprofitable until they reach enough scale. So IIPR will come in and say, we'll buy your building and lease it back to you for the next 10 to 15 years. And then you will pay us a significant amount of money to do that. So a lot of them will take that money and be able to reinvest in the business, and they can't really get it other ways, so they're happy to do this, and IIPR can then benefit greatly from that. So they've been growing a lot recently. I'm excited to hold them in my portfolio. I also own Skyworks Solutions, which makes a lot of the parts that go in iPhones. So they do a lot of different stuff with the iPhones, but basically they are a semiconductor company, and I think that they're going to grow a lot, especially as iPhones continue to progress and as new generations come out. There's more and more stuff that goes into the iPhones, and I think that they will continue to make profits on that. Now, I also own Qualcomm, which is a 5G stock. So the future of data is going to 5G. So right now, we're on 4G. Unless you have a 5G phone, there are very few of them out there, as I understand. But 3G is, I believe, 1,000 times slower or 100 times slower than 4G, which is 1,000 or 100 times slower than 5G. So they're talking about with 5G networks, you are going to be able to download like a 2-hour movie in 3 seconds. So that's just an insane amount of processing and data. So I think that they're supposed to do really well in the future. They're the main 5G player. So I think with a lot of things, once you get used to it, you won't want to go back. So I think after you get introduced to 5G, you won't want to go back to your 4G iPhone. So there are also other technologies that will use this too, like self-driving cars and different medical instruments. So the processing speed is really important in those types of scenarios. So I think that Qualcomm will really do well when that happens. The next stock I own is Disney. They were really beaten down when I bought them. My average share price is less than $100, and they're at $117 right now. They have introduced Disney Plus, which is their streaming service, and they've grown a lot. I think that they're past 50 million subscribers, but I think they're more like 60 or 70 million. And when they said that they passed 50 million, they just introduced it to Europe. So I think that they'll do really well. They have so much content, and it's so cheap for them to produce because they're already producing it for the movie theaters. So just to throw it on their platform doesn't really take anything for them. So I think that they'll continue to do really well. And once they open up their parks, they're going to do really well into the future. They did suspend their dividend, but I think they'll bring that back after they can reopen the parks. The next stock I own is NRZ. which is a mortgage REIT. They buy and sell different mortgage securities and stuff like that. It's kind of a confusing business model, but I bought this early on and they decreased in price a lot. They're at maybe $16 or $17 a share before the market downturn. They went down to $3.80 or $3.50 and I bought them at $3.80. I was actually mad because they're at $3.60 and it took a while to process my payment to go through and buy the stock. But I have an average share price of just about $7. They had big dividends before this, so they were paying, I believe, 50 cents a quarter, so $2 annually, and I had bought in just hoping to get some of that dividend money. They did cut the dividend a good amount, but I think that they'll bring that back once the economy turns around. So they are kind of a high-risk, high-reward stock. The next stock I own is SPHD, which is another index fund, but it holds a lot of the high dividend payers in the S&P 500. So they take about, I think it's 75 of the top dividend stocks, and they weed out the ones that are most volatile, so the ones that go up and down in price the most. They weed out 25 of the most volatile stocks, and then you're left with 50 of the highest paying, less volatile stocks. And I think it was right around a 5 or 6% dividend yield when I bought it. And I have a couple $100 in it. My share price is about 10% less than the stock is now. So that was a good return. I didn't want to put too much money in that, and I do love dividends, but a lot of the stocks in here are stocks that are kind of going to be irrelevant or more irrelevant in the future because they have tobacco in there, they have different oil stocks, and I think that those are going to decrease in value over the next 5 to 10 years as a lot of the baby boomers maybe pass away, and as my generation gets older, we don't smoke that much compared to other generations. So I didn't want to put too much in there, but I do like the idea of SPHD. The next stock I have is CCL, or Carnival Corporation, Carnival Cruise Lines, and I have about $300 worth. I was buying this as it dipped, so I think right away when I bought it, it was maybe $30 a share. I added positions when it was lower, maybe around $10 to $12 a share. I didn't add that much, but it dipped until it was $8, so it had gone down 85% from the peaks, and I think that they'll do well in the future once they can open back up and once everything in the economy is back to normal, but that might be a little while. The next stock I have is JPMorgan Chase. They are one of the largest banks in the United States. They pay a nice dividend, right around 3 or 4% now, and I think that they'll do really well, especially once interest rates tick back up. It's really bad for banks when the interest rates go down. So the fact that the interest rates are about as low as they have ever been right now is a good situation to buy into these stocks, I think, because once they do move the interest rates back up, which I think is something that they will need to do eventually because they need to be able to pull them back down when hard times come, I think that JPMorgan Chase, along with some of the other bank stocks, are going to do quite well. The next stock that I have is Realty Income Corp, and they are another real estate investment trust. They have a lot of different tenants and they're well diversified. They pay monthly dividends and they're known as the monthly dividend company. I think that they're going to do quite well in the future, and they're kind of a fan favorite for a lot of investors. I have about 2% in them, so not that much, but I'd like to add more in the future. I also own Wynn Resorts, which is actually one of my best performing stocks. So they own several different high-end hotels, and I bought them. I should have bought more of them, but I bought them for an average share price of $55. I think they dropped right around 40 or a little bit below at one point, but I bought them around 55. They're worth 83 now, so about a 50% return. They're a little bit higher risk, so I didn't want to put too much money in them, but they pay a pretty nice dividend when they pay it. I think they cut it for now, but I think they'll bring it back once they're able to open their hotels. The next stock that I bought was Delta Airlines. I bought this really early on, and it is one of my worst performing stocks. So as you can see here, I bought an average share price of $40. They're worth $23 now. I have thought about averaging down and adding more stocks and more shares in this position, but I think it's going to be a long time before they are able to make a lot of money again, so I don't really want to buy in now. I think that they will get back to the price that they were before and increase above that, but I'm not really interested in buying anymore at this moment unless something changes. The next stock I have is AT&T. They pay a juicy dividend of about 6 or 7%, and I have been able to stay about at my average cost basis on this. So I don't plan on buying a lot soon just because I think there are other stocks out there, but it pays a nice dividend, so I want to add it, and I think that it has a good long-term outlook. The next stock I bought was an oil tanker stock, and it's down, a little bit since I bought it, but it's down about 3% on the day. I might buy more of this. So I have been making a lot of oil tanker stock videos, and I bought this earlier this week. They are an oil tanker stock that has actually gone down about 50 to 55% from the beginning of the year. So unlike NAT, which has increased in value 3 times throughout the year, they have decreased by a significant amount. They are posed to make a lot of money this year because they have a lot of different tankers. So they have about 100 plus tankers compared to NAT that has 23. And these tankers are making money hand over fist right now. I think that they'll do quite well. The reason that their stock decreased in value is just because of their leverage. They have a lot of leverage and have a lot of long-term liabilities. So I think once they are able to get some of the cash flow and pay off the debt, they've also been able to push out some of the debt. I think that they'll do quite well and are posed to get back to the price that they were at the beginning of the year. So that is a look at all my different stock investments in this portfolio. Let me know if you want me to do this in my Robinhood account, or let me know if you want me to dive deeper into any of these stocks. So I think that I could make a video on Facebook for 15 minutes and some of these other stocks too. So just let me know in the comments if you like any of that or if you want to see any of that. I appreciate you guys watching, and just again, if you have questions in general, send them to my email. Thank you for liking and subscribing, and I will see you in the next video. Thanks.